What's up, team? This is one I'm actually kind of excited to talk about today. I've been following Toast for a long time, well before their IPO. This is in particular a company I've really seen explode onto the scene across a number of different ways. And I see it used everywhere when I'm on websites, when I'm in restaurants, when I'm in coffee shops. It doesn't matter where I go. I seem to not be able to avoid Toast and what Toast does. So, at its root core, Toast is really a point of sale solution for restaurants, right? Their entire mission is this idea of empowering restaurant communities to delight their guests, to do what they love and thrive, right? That's from them. And I think it's a good call out that like they do a couple of different things. They do it really well. And I'm going to get into some of that. But before I do, I just want to hit on their most recent earnings before I jump into some of the details here. So the headlines this past week really were simple. Toast shares are popping as revenue beats estimates. Forecasts show more restaurants are going digital. And sort of the key takeaways here is simple. The total number of locations Toast serves increased to 68,000 in the second quarter, up 40% from a year earlier. Think about that growth. 40% growth in restaurants leveraging their solutions. Toast revenue had a growth of 58%, which was well above the estimates and showed that restaurants are adopting the technology despite challenges within the economy. And then finally, this is a quote from the CEO. Labor and food are two of the biggest expenses for restaurants, and the current environment has amplified the pressure on both. So this is a pretty big deal. And Toast is just one of those real niche players who has found a way to be ultra successful within their current space that they're in, while also finding ways to further develop beyond that. Now, the beauty of Toast is they really specialize in that sort of food service restaurant space, which traditionally is very slow moving, high degree of failure rates. What they've managed to do is create a technology platform that serves those restaurants, that helps them be more successful, which, of course, as you can imagine, only furthers the success and adoption of Toast in general. Now, I think this is really interesting from a numbers perspective. We'll get more into the details here as we go in a few minutes here. But I just want to call it out that like these are the kind of opportunities I'm always looking for. I currently do not own any Toast stock. I have no derivative positions whatsoever. And I haven't yet decided if I want to jump in now, wait to see what happens. So just fair warning, I'm not in it. It's possible I might decide to be. I haven't made a decision on that as of the recording of this video. One of the nice things we've also seen here is even from the analyst perspective, we're hearing that in general, a lot of people think that they have the ability to really execute in what's being called a challenging macroeconomic environment, now specifically from Piper Sandler. The other nice thing about this as well is they're not just growing their core businesses, right? They're expanding their product portfolio, which appears to be resonating within this environment marked by rising food costs, labor shortages, supply chain challenges, and in general, it's helping restaurants to go to a digital and automation process. And these are notes from analysts, right? This isn't just pulling it out of thin air. So before I jump in, I want to share all of that because I was like, wow, this is a really interesting take on a company that's doing some really cool stuff. In theory, they compete with some other folks. Like you could put them up against a Square or an Apple payment service, but it's the way that they've really integrated and focused 100% on this all-encompassing approach to looking at restaurants. I'm going to cover the presentation deck in a second, but one of the things I talk about all the time is this idea of due diligence. I take due diligence very serious. I've covered this a million times, but I'm going to say it again. Every time I go to a restaurant, I ask them, and this is something that's so easy to do as an investor, and I really urge you to start doing it too. Every time I go out to eat or go to a coffee shop where they have either some sort of a POS on the desk or a handheld point of sale solution, I always ask them what brand they're using. Now, the nice thing with Toast, of course, you can very easily see their name is on the devices. So I'll ask a couple of quick questions while they're ringing me out, like, oh, do you like the interface? Is it easy to use? How long have you been using it? Have you had any issues? And it's never going to be perfect answers from anyone because not everyone understands technology. But I do want to call out that, broadly speaking, across a couple of years of asking these questions every single time I go out, I've really rarely heard anything bad about it. In fact, I would say it's the opposite. In the rare cases where I can talk to someone, even in like a bar environment where it's fast paced, their ability to quickly understand and ascertain where they are and close the books that night are really convenient and makes for sort of that instant transaction capability. So all that being said, I want to go over their recent investor deck. I won't go over every single detail of it because it's somewhat long, but I think it's important if you're not looking at this company, it's worth looking at. As always, right? My job is not to make an investment decision for you. It's not even to make a recommendation. All I'm saying is if you haven't looked at this type of a niche player with explosive growth, it might be worth at least looking at and making sense if you have somewhere in your portfolio for this type of a play. So I'm going to share my screen. I'm going to jump right on in here. Excuse me. So first and foremost, I sometimes talk about where I show these presentations. I want to really make it very clear if you've never seen this before. This is where I will go. I'm on Tost's website, and I'm on their investor relations page. And I'm going to be going over their second quarter fiscal earnings presentation. They did have a call. Of course, I urge you to watch that. I like to look at these things from my own perspective. I don't always want to hear what the executives have to say about it because of course, they're going to really skew it to the way they want to deliver it or present it or whatever the case might be. I like to look at the numbers and interpret it to my own effect and how I sort of see that. And of course, I think it's pretty hard to ignore this. Post earnings, they saw an over 8% pop in the stock. So, if you were in Toast, congratulations, you got a nice little pop here, and we'll see if this can continue. So let's jump right in. I say this all the time. I hate to be redundant, but I'm going to do it anyways. I love the companies that put together these beautiful, well-done presentations. I think it is absolutely first class. It is the best way to get it into the hands of users, and it makes people want to learn more. That's my opinion, but I really believe that that's a missed opportunity for many companies who don't do nice decks like this. So I'm going to expand this to make it a little bit easier for everyone to see here in just a second. Excuse me. Okay, so let's do it, team. So of course, as usual, the general disclaimer is that I have no current relationships with Toast. I don't use their products. I don't sell their products. I don't have a business relationship with them. This is generally also a statement saying, hey, do your own research. There's things in here that could be forward-looking. This is their work, not mine. I did not build this. I did not design it. And I was not consulted on any of those things. But I just want to call that out that some of the numbers they put in here might be based on GAAP. Some might be non-GAAP. So just be aware that for a general sense, you should always do your own research either way. And I'll reiterate this, what I read a moment ago. Their mission is pretty simple, and I think they're executing on it, right? Empower the restaurant community to delight their guests, do what they love, and thrive. And, the reality is looking at feedback from customers who use Toast, this does seem to be the case. And here's what they called out as being major highlights within their earnings. Large and growing TAM, right? And we sort of covered this a moment ago, but this is a custom-built, multifaceted solution for restaurants, which is a massive vertical market. Right? Restaurants can be everything from quick serve to full serve to sit down. It can be takeout, it can be coffee shops, it can be snack stores. It can be all sorts of different things that exist out there. They have a differentiated product offering. It's cloud-based, all-in-one digital technology platform with integrated payment processing. That's a mouthful, but I'm going to take just a moment to explain this. What it means is they're not solving for one of the problems within a restaurant, such as ordering, or they're not processing credit cards, but nothing else. Or maybe they're allowing for online ordering, but nothing else. Their platform is designed to do all of this. And as you'll see, you may not be aware of this, this goes beyond just that side of the business. It also includes, because of acquisitions, the ability to manage and hire staff and schedule. That, for those who don't know, is a massive problem within this industry, is keeping hands on deck. So we'll cover that shortly as well. And of course, one thing I think that's been very clear based on what you're seeing for numbers here as well is they have a proven durable growth rate at scale. So even though they're massively adopted, they're still growing. I mean, unbelievable results we saw a moment ago, or I was speaking to a moment ago. We'll cover that in here as well. And then I think the other nice thing about this is it's a very predictable, investable product. Again, not investment advice, but they have healthy unit economics. Their differentiated and efficient go-to-market engine and customer success strategy is working at scale. So I want to give you my take on what this means. When I think about unit economics, it means predictability based on footprint or go-to-market. So I can look at a Starbucks and understand at each store what to expect for margins, what to expect for fixed cost, for variable cost. I can do the same for McDonald's. I can do the same for a piece of real estate. When technology companies can get unit economics that are healthy and predictable, it makes it very investable and very easy to understand what success looks like and also have a feel for how the future is going to trend. Again, that's my take on it. You might disagree. That's what I look for. I'm trying to see if I can close this out so I can, there we go, perfect. So as we know, the restaurant industry is one of the largest industries in the US and globally speaking. So there's 860,000 locations in the US, right? Wow, that's pretty wild, right? So their TAM in the US is 860,000 locations. Now, oftentimes when I do these videos, I talk about the difference between TAM, total addressable market, and SAM, the serviceable addressable market. Because for a lot of big tech companies, although their technology can work for anyone, there are points where customers are too small or maybe too tough from a data perspective, or there's some sort of hurdle to get over where that total market isn't really going to work. They have to figure out the serviceable market. I think what's unique with Toast is it scales to the needs of the business. So maybe I need one single point of sale credit card machine, or maybe I need 1,000, but it can work that way. It actually reminds me a lot of Square from that perspective. Now, looking at the global perspective, which is really largely untapped by Toast right now, there's 22 million global restaurant locations worldwide. Think about that from a size perspective. Even grabbing a small percentage of that market makes Toast a mega brand. We also know that there's about $800 billion in annual US sales. This is going to 2021 rather. And just an interesting caveat here, and again, take it for what it is, but restaurant sales represent, or food sales in general, maybe even really about 3% of total GDP. That's insane. That's wild. And of course, as we just talked a moment ago about staffing and hiring, there's about 11 million plus employees who work within the food industry. So again, it's huge in a lot of different ways. And it makes sense, right? Everybody has to eat. This is probably one of the best charts I've ever seen in my career of looking at and understanding earnings. And I think that it's somewhat self-explanatory, but it really speaks to the level of complexity that this company is helping people to solve for. Actually, I'll tell you what, I'm going to be honest here. I'm getting myself excited talking about this, and I might do a little bit of a deeper dive. If anyone's interested in me doing it on Toast, the stock, as opposed to Toast, the earnings. This looks like it has some potential to be very interesting. So I might want to get into that. But let's look at the different components here, right? We've got this super complex business that has to handle intake of food, putting it on the table, cleaning the table, staffing, cooking, serving. There's a customer success component. There's a back office component. There's how do we charge? How do we tie it all together? I think this graph really pulls it together nicely where on sort of the business side, the behind the scenes, there's integrated payments, financial and loans, there's banking services that have to take place. We also know there's takeouts and drive-throughs, first and third party delivery services. So think I've got a driver who delivers those pizzas, but I might also use Grubhub or DoorDash as well. We also know that they're managing things like payroll and HR, benefits, scheduling, insurance, and recruiting. That's some of the hardest part of any business, but especially in the restaurant business. Of course, you know what else they need to do at scale, and I'm going to drill into this in 1 second, reporting and analytics as well as accounting. They have a very robust team internally at Toast who are really doing awesome things from the data science perspective, but also for that individual business who's using their tool, the ability to get quick and easy reporting and analytics off of the Toast device, as well as the ability to see those numbers in real time or near real time, that's going to be really cool. Now, from a scheduling perspective, think for that customer who wants to get a reservation, right? This could be setting things like wait lists, could be getting those reservations in the system. It could be even how we manage the table process inside of a restaurant. I mean, this is pretty cool. I almost feel like I don't want to read everything on here, but I'm going to do it because it's actually such a great chart. I think as well that we often forget about what happens in the kitchen, right? Kitchen operations and inventory management, machine breakdowns, right? Are we tracking usage rates? Supplier management to make sure we have what we need to put food on the tables. Now, after we eat, of course, what do we have to worry about? Well, we need a point of sale. How am I going to pay for my food? Are we going to leverage a kiosk? I had something I was talking about the other day where the Dunkin' Donuts in my areas are now using kiosks. Do we have time clocks or mobile ordering? Can we do scan to pay so I can just pay at a register and walk out on my own? And then, of course, the marketing side of things is really interesting as well. We want to have integrated websites where I can make reservations, order my food, maybe be on a wait list, right? Whatever the case might be, maybe order gift cards. And of course, we want to have marketing tied into this as well as loyalty programs. And as I said, those gift cards are key points. So when you really look at this for a second, you start to think about the total opportunity just at an individual restaurant, let alone the millions of them that exist globally. It's pretty wild to think about. Now, this is a really interesting piece. And oftentimes in my line of work within analytics, we think about this from the flywheel effect, where it's very hard to get the wheel going. But once it is, it's very hard to slow it down. So I think this is a great way of throwing it out there that Toast is really the epicenter of the experience for everyone involved, right? Guests, success of the restaurant and the business, as well as employees who want to come back to work. So they focus on things like improved service quality, memorable and tailored experiences. That's such a cool call out. And of course, right, they want greater sales and increased loyalty, which only furthers those great sales. They want to decrease turnover, which is a major cost for a lot of companies and businesses. They can improve wages and benefit access by having better analytics and understanding of their accounting. So see how it all just keeps rolling in. It keeps rolling in. As one thing gets better, another can get better, another can get better, and then it resets and gets better and better again. This is when I get really excited about opportunities like this. Now let's call it out exactly what we're talking about with Toast. I know we're a long way here and I haven't talked about earnings yet, but I think it's valuable to have this level of understanding about the platform. I'm by no means pretending like I'm an expert, but I have owned businesses in the past and we have used point of sale systems. We've had reservation systems. I have built an analytics system on top of an old Microsoft Access database back in my day. So I know how hard it is to do this if you don't have that skill set. I also know how even with the skill set, it doesn't scale and it's a constant pain in the rear end. So if a solution like this existed back in those days, I would have wanted to use it without a doubt. I would have wanted to use this. So let's talk about what Toast actually is, right? It's not just something you throw some butter on and eat for breakfast. So the idea of the Toast platform is tying everything together to deliver a better together process. And they have what they're calling here really a full suite of products. And it starts with these three baseline products or pillars: the point of sale, the hardware, and the payment processing. So when you think about this, the payment processing is the interactions that happen behind the scenes that connect the credit cards to your accounting systems and bank systems. The hardware is the actual component that sits at the desk, sits in the staff's hand to take those payments or those orders. And then, of course, point of sale is for any kind of a place where maybe I don't have a server, but I just want to swoop my credit card into a machine and be able to walk out with what I buy. So it's really covering the process of all those different components. Now, a layer beneath those base products, they have over 15 elective products. I had no idea they had this many. I felt like I knew Toast pretty well. This is pretty mind-blowing. So within the point of sale, they've got Toast Go, order and pay, and kiosks. Within digital ordering and delivery, they've got online ordering and takeout, delivery services, and delivery partners. Within team management, it's payroll, scheduling, tips managers, pay cards and payouts, partner-enabled products, even insurance and benefits are in there. What's really, man, talk about like a moment to feel excited about something. Look at the fintech products they're building that no one's talking about. Okay. No one I have heard talk about what Toast is doing with fintech. They have Toast Capital and customer financing. Think about how huge this is for a restaurant who can get financing directly from a provider like this, and how easy that would be when they already can see their growth, their employee costs, their income, their revenues, right? How busy they are, and how quickly that process could potentially work if they're all on the same page, aligned on the same platform. From restaurant operations, it's things like display systems, multi-location management, inventory management, and more, right? Marketing loyalty I won't cover, but clearly there's a lot there. And then from the platform insights perspective, this is massive too. Like full ability for reporting and analytics, as well as Toast Partner Connect and APIs. What this really means is you might have a number of disparate systems you need to connect to. Those open API systems will allow you to write those code or have open source connections to those other systems to bring it all into one picture. I mean, this is getting better almost by the page. And again, I'm not trying to sling this to anybody. Oh my gosh, I just read it right off the screen by accident. I'm not trying to sling this as a solution to anyone, but really more so the fact that I personally think I need to do a lot more research here for myself to decide if this is something I want to look at, because it seems pretty exciting. Now, one of the big acquisitions, of course, they made was Sling. And the idea here is it strengthens and really it helps to fully build around this management product suite. And again, I'm calling it out like I'm not meaning to get excited, but these are some really cool things to read in a time where earnings are so terrible everywhere else. So Sling allows for better scheduling around high engagement products that complement what they're calling the team management suite. So again, these are their words, not mine. So the idea of Sling is really to give employees more. I'll leave it at that, right? Optimal staffing, more efficiently building schedules and managing labor, but also employees have a high engagement product that they'll check in with on a regular basis. So think about this for tracking your tips, how things come together. I think that's pretty exciting. And from the business perspective, what they're saying is it's going to increase payroll adoption, deliver more complete team management suite, as well as a direct touch point with restaurant employees. This is something I think we miss a lot, where for folks who work on tips or commissions, one of the biggest frustrations, if you don't work in sales, I'll just give you an example. One of the worst parts about being in sales is the delay between the time that you close deals and know what you're going to make on them. Very, very few enterprise sales companies, for example, have straightforward commission systems. What this means is that it's not like you get a flat rate for everything you sell. There's usually different multipliers, spiffs. There's special credits for different types of products. It's very hard at the end of the day to understand what revenue recognition, when that might be paid, and what you're going to be paid on it. So having something like this, where you can log in and quickly see what you have sitting in there for tips, that is huge. I can see this being used across a number of other types of companies as well. I won't cover everything else on this page because I talked a lot about it. Now, I had already talked about this earlier, just my own opinion, but it's nice to see here that they're calling it out. What Toast is really saying is that their TAM is unbelievably massive, right? They're only doing about 800 million in their Q2 2022 ARR. They have what they're calling a serviceable addressable market of 15 billion, a US total addressable market of 55 billion, and 110 billion or more of global TAM. I cannot stress how much I respect that they separate this out and really point out the difference between SAM and TAM. I think this speaks to the fact that they know what they can do, they know how they can manage that growth, and they know who to target for that growth. That's really nice to hear, and that's something we've been missing on a lot of earnings calls. So they talk a little bit about their go-to-market strategy here as well. Hyper-localized, focused on strong customer communities, really looking at improving sales productivity from increasing category positions, and then a strong network effect that accelerates growth. This is brilliant because as those loyalty programs can scale, the more they can tie it into the broader experience, the more people are going to use it. But here's a really cool stat on the side here. Approximately 2/3 of new locations come through inbound channels. What this means is that their salespeople, their marketing people, their business development people are only actually bringing in about 1/3 of their new location business. 2/3 are coming in on their own, looking for this as a solution. That is efficiency, I mean, at a level that I think is so rare nowadays that you don't see it. Most companies need to hire insanely massive mega teams to bring business in. Toast is the opposite. Toast has customers coming to them to solve their problems. That's unbelievable. That's awesome. And then approximately 1/5 of new locations come from other restaurant partner referrals. So another 20% of those new locations are from referrals from other happy customers. So their customers are doing the work for them to generate more revenue for them. That's pretty astounding, frankly. So let's get into some of the quick financial results here. So they are an integrated software and payment model. So they have recurring and one-time based revenue models. On the recurring side of it is the subscription services. Those are a lot of those key features we covered earlier in the call. The payroll, the inventory management, the point of sale solutions, right? And they also have the financial technology solutions as well. That's connecting the credit cards. That's going to be some of that financing, fintech aspect of it. But then they also have their hardware model. And this is a very great approach for those who are relatively new to looking at investments this way. I'm an angel investor. I do invest in private companies. One of the things that I almost always am looking for is the dual-sided approach to integrated software models. What I want is some sort of hardware that can be deployed at scale that has a fixed cost. And then once you have it, there's a recurring charge for using it. That recurring charge can grow over time as your customers increase, as your prices increase, as new products are added. So from an investment perspective, this is something I'm looking for often. They can sell their hardware and professional services for things like installations, implementations, consulting, etc. So they're having that one time or those fixed rate prices. And then on top of that, once they're in, you're going to pay a monthly fee. Now, I want you to think for a second why this is so important. After you buy the hardware, you place it in your store, you put them in the hands of your servers, and then you have someone come in and make sure everything's installed correctly, implemented correctly, connected to the bank, to the credit cards, to the tables and the billing system. How likely are you to really get rid of that system and then have to pay for all those things again from someone different? And the reality is not very likely. So typically with these types of models, we tend to see high net revenue retention models, as well as pretty strong customer acquisition costs because they're really emboldened by not leaving over little tiny things. It's not to say that there aren't occasionally going to be complaints or issues or customer success problems, but the cost of removing it is massive. This is why Oracle's been successful for so many decades. They have such a deep integrated hardware model that getting rid of it is almost more costly than going out and buying a whole new system. So I just want to call that out. This is really the core model here of how they make money. Just looking at this quickly, right? Their annualized recurring run rate, or ARR, right? And sometimes you'll see MRR for monthly recurring run rate as well. So just keep that in mind. But their ARR for subscriptions and payments is 787 million as of June 30th of this year. And when you look at their growth here, right? Their year-over-year growth rather, going back from Q2 21 to Q2 22, look at the difference in growth here, both in subscription services revenue, financial technology solutions, looking at gross profit, of course, financial technology solutions, hardware revenue, professional services revenue. Like, this is pretty great stuff, man. I mean, they're really growing like crazy. I don't want to read every single thing on the page, so I'll leave it here for a second to look at it. But they're really growing pretty steadily here. Now, of course, there's going to be some areas where like it might seem less than others, right? From the 586 to 486 to 512 to 535 isn't necessarily huge growth, but this is obviously a big jump here. And this has a lot to do with when you acquire and add technologies and really inorganically expand your footprint and your TAM with it. That's where you start to see growth rates really explode. Now they're calling this out. Of course, I want to make this very clear. These are their numbers, not mine. ARR, which they're calling the core operational metric, is scaling rapidly. So annualized recurring revenue rate, they're now looking at about 787 billion, up against what was previously 637. That's massive. Look at that growth rate, right? Huge, huge rate. New location adds accelerates to another quarterly record as well. So just looking at net new locations in orange and total location growth across the company, right? They've added a lot of new locations, as well as now having a total of 68,000 locations on the books. That's huge, right? That is huge. And I believe what they're calling out here, although it's a little bit hard to understand, is they've added 6,000. Oh, of course, I can see it here. They've added 6,000 in 1 quarter for the first time ever. That's crazy. That is awesome growth. So, gross payment volume, this is really when you think about in terms of what they're taking in on those credit cards, right? This isn't necessarily the margins, but the amount of money that's being processed through their systems. Okay, I'm going to say that one more time. This isn't that they're making this money. That's the amount of transactional flow through their system has reached 23.3 billion. Okay, that's obviously this is really indicative of the number of restaurants using and leveraging their system. And then, of course, they've got some nice steady growth here across the percentage of locations using more than 4 of those elective products. So that's really cool, too, because that means that the product's not only being adopted, but more components of the product are being adopted, okay? So they're calling it out again. I just want to, and the reason I'm saying this, I want to make it clear. It's not my interpretation of what they're calling here. I just want to react to what I'm seeing. They have what they deem attractive gross margin from recurring revenue. Not a big surprise there. Anyone in that recurring revenue space, you would hope to see this. But their total non-GAAP, I'm calling this out, this is non-GAAP, gross profit of 169 million for that quarter. So these are made up of 2 things, right? They've got a recurring subscription. The recurring model is 169 million, and they've got a one-time hardware professional services of a negative 45 million, right? So we're looking at here at a total non-GAAP gross profit of 125 million, year-over-year growth of 33%. That's not bad. That's not bad at all. So the other thing I think they're really focused on as well, and I'm glad they have some slides in here, is around this idea of, excuse me, efficiency following recent investments, right? They want to increase efficiency here. So the investment in sales team takes time to scale. I can assure you, as someone who's both led many and large sales teams over my career in the ARR space, it is very, very difficult to find the right people who have the right kind of skill set to really scale with your business and drive these kinds of returns. So I think this is a fair call out that their investment in the sales team is going to take time, right? Tenure and productivity are correlated. That's absolutely true. Both positioned to increase going forward with our sales team scaled up and set to grow the steady state rate going forward. In a nutshell, what they're saying is it doesn't matter how good you are. When you come in and you're new, it takes time to learn the system, to go to market, and how to sell this product. As their employees have been there for a longer period of time, from a tenure perspective, their productivity should increase with that. And that's what they're calling out here, is that the rep median tenure, right? How long they've been a tenured member of the team, as well as their productivity. We can see that growth rate as people have been here for longer periods of time. And I mentioned flywheel effects earlier, but efficiency and productivity in less developed territories improves over time as the market penetration increases. In a nutshell, what they're saying is this. If we go to territory XYZ, we have absolutely no one in that territory working it and no one's using their products. With every new customer and every new acquired business or restaurant that I can go and reference as a user, more businesses in that area are going to start to be more interested. It's going to start to get easier to sell into them. They're going to start to be able to see what their peers and competitors are doing. This is the idea, is that with that growth, with that focus, with that growth, with that focus, with that growth, with that focus, right? We start to really build fast. And now more and more people start to wonder why they're not using what everyone else is using. Excuse me. They call out something that not a lot of other earnings reports have done this quarter that I've seen. R&D investments position team to support continued scale and growth. So I'm not going to speak to R&D because there's not a lot on here, but I want to just call this out for a second that it's interesting here to point this out that one of the biggest issues with any kind of product that is focused on a recurring revenue model and hardware is going to be customer success and service. Machines go down. There's issues with the processing. People lose their passwords. They can't log into the system. There's a disconnectivity issue. You name it, I've seen it and it has happened. If you don't have strong solutions in place to help scale your customer support and service teams, it's going to be a problem. The fact that they're calling this out, I think, is a huge thing. It helps to make things easier for customers as well. Excuse me. Man, they've got some good stuff in here. Normally, I don't go over every slide, but this is just such a good one. Their balanced R&D investment, prioritizing scale and durable growth. This is what it looks like. Their breakdown of the first half of 22, this is Q1 and Q2, research and development expenses. Again, just to be clear, it's a non-GAAP basis. I don't know, what do you want to call this number? It's kind of a without anything on there, it's hard to tell, but let's just say the vast majority of R&D expenses is going to core products and platform, more around emerging initiatives. So maybe new areas of focus, new products, new things they're going to work on, as well as what's pretty good here is seeing those internal systems. This is really talking about what makes Toast the company run better, do more, have more efficiencies. That's an interesting call out. Oh, of course, I literally got ahead of myself. I could have just read what was right on here, but essentially what they're calling out is the majority of ARR comes from those core products and platforms, new and existing products in the fintech and core restaurant operation areas, including products targeted for guests, platform scale and stability, and platform services such as reporting and analytics. That's awesome. The emerging areas right here in the gray represents less than 5% of ARR. So what they're looking at here is products with initial traction that have meaningful near-term growth potential. So team management and payroll, that's cool. Products and offerings to expand our ARPU and location growth potential over medium term. So thinking international expansion. I got to tell you, like, it's really interesting to watch this and think about the fact that they are not penetrating the international markets and how big those markets are going to be. And there's lots of ways you can do that. They can do it themselves. They can find partners in those spaces. They can have subs that they open up there. There's just a lot of ways to do it. And that's a massive market. And then, of course, I sort of already called this out accidentally without looking at it. The internal systems are internal IT systems to support the business. That's exactly what I was describing. So I don't want to jump into all these individual pieces here. As usual, I don't really cover this. I think that this is something that there's a million other people who are accountants and CPAs who might want to go into the details here. I always urge everyone to take a look at these things. But by and large, I think it's really important to call it out that it's worth knowing what all these different things mean. I just really want to look at the big, broad strokes. I am typically a macro investor. I want to see the big picture, how trends are moving over time, and where the opportunity might be, and what kind of growth rates I can expect from the opportunity. I'm going to probably take another hour or two today on my own, doing a little bit deeper research into the price, where it sits, where I think there's potential growth rates here. And I'm going to follow up actually with what my plans are. It is absolutely, I'm saying this 1,000 times, 100%, I don't recommend stocks to anyone. But if I like a company and I think that makes a lot of sense, I'm happy to say that I like a company. So I'm going to do that a little bit today, take some time to go over it. And with that, if you watch till the end, I really, really appreciate you watching. And do me a little favor. I did this the other day. It was kind of fun. If you're still watching, just leave a comment that says butter. Okay. I want to see how many people are going to get to this point. Thanks so much for watching. I really appreciate it. If there's any company you want me to jump into, just ask. I'm working on SoFi, but they're so big, I need more time to do it. But anyone else out there you'd like to see, hit me up. I'm glad to do it. Team, thanks so much for watching. I really appreciate you. Thanks so much.